Welcome to Smart Stock Watch. Today is February 20th, 2025, and we're diving into Southern Company's fourth quarter and full year 2024 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Southern Company, a leading energy provider, has just released its earnings report, and there's a lot to unpack, from revenue growth to earnings per share performance.
Revenue and profitability overview. Let's start with the revenue figures. Southern Company reported fourth quarter revenues of $6.3 billion, up from $6 billion in the same quarter last year. John, what are the key drivers behind this growth?
The revenue increase of 4.9% in Q4 and 5.8% for the full year was primarily driven by higher utility revenues. This was partially offset by increased non-fuel operations and maintenance expenses, as well as higher interest and depreciation costs.
And how did this impact their profitability?
Despite the revenue growth, net income for Q4 was $534 million, down from $855 million in the previous year. However, for the full year, net income rose to $4.4 billion from $4.0 billion, reflecting a strong overall performance.
EPS performance and analyst expectations. Now turning to earnings per share, Southern Company reported an adjusted EPS of 50 cents for the fourth quarter. This was slightly below the analyst forecast of 51 cents. John, what does this tell us?
While the adjusted EPS of 50 cents missed the forecast by a cent, it's important to note that this is a decrease from 64 cents in the same quarter last year. The decline is attributed to increased operational costs and interest expenses, which have impacted the bottom line.
How should investors interpret this in terms of future performance?
Investors should consider the company's strategic initiatives and cost management efforts. While the EPS miss is a concern, the overall revenue growth and full-year profitability indicate a solid foundation for future growth.
Operational efficiencies and future outlook. Southern Company's CEO, Christopher C. Womack, highlighted the company's commitment to sustainability and meeting energy needs. How does this align with their future outlook?
Womack emphasized the company's dedication to providing clean, reliable energy and their goal of achieving net zero greenhouse gas emissions by 2050. This strategic focus on sustainability is expected to drive long-term growth and align with evolving regulatory and consumer demands.
And what can we expect from Southern Company moving forward?
With a strong customer base of 9 million and a focus on innovation and resilience, Southern Company is well-positioned to capitalize on future opportunities in the energy sector. Their commitment to sustainability and operational efficiencies will be key drivers of their success.
Key takeaways. In summary, Southern Company has demonstrated solid revenue growth and a commitment to sustainability, despite a slight miss on EPS expectations. John, any final thoughts on their investment prospects?
Southern Company remains a strong player in the energy sector with a clear strategic direction. Investors should keep an eye on their sustainability initiatives and cost management efforts as key indicators of future performance.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Southern Company's performance in the comments below.